Want to become a crypto trader, but it seems confusing, so many information, hard to understand. This video is going to fix that. I've been trading crypto for 4 years, and in the next minute I'm going to explain to you how crypto works in the simplest way possible, as I wish someone explained to me when I started. So for you, just take notes, and at the end of the video, give me a like and subscribe to the channel. Hello everyone, I'm Daniel and I've been trading crypto for 4 years, and in this video I'm going to explain to you in the simplest way how people makes money in crypto, how it works for people to get some interest and go to invest or trade in crypto. You have been trying to do your research to understand how it works, but you're getting so many information and you don't know which one is important for you to really understand how it works. I've been in the same situation like you, like 4 years ago, and I wish someone explained to me the same way I'm going to explain to you for me to start to trade crypto. But before we start, tell me in the comment section, why do you want to invest in crypto? Why do you want to start to trade crypto? Because everyone has their own reason and I want to know what is yours. And also, all the information that will be shared in this video will only be for education purpose and not financial advice. So you want to understand how you can make money with crypto, or why people are investing or trading crypto. For you to understand that as a beginner, you need to know about 3 concepts. You need to know the concept of coin and token, you need to know the concept of volatility, and you need to know the concept of market capitalization. Just like Bitcoin, Ethereum, you know Satoshi Nakamoto is behind Bitcoin, you know Vitalik is behind Ethereum, someone or a group of people will be behind all the coin that you will meet, all the crypto that you will meet in this industry. So crypto is just a digital asset like stock, and it runs on blockchain technology. There will be now people who will come up and create their own technology in the blockchain, and then they will, for you to support their project, they will sell to you the crypto. They'll create a coin or a token for you to support them, for you to support their vision, for you to support the value they are bringing in the industry. You need, as an investor, to do your research to understand who is behind, why they created a certain coin, why they creating a certain token. Once you understand why people are going to that project, why people are buying that project, you know that they are trusting the people behind, they are trusting the value that is being promised on a specific project. A coin will be the one that will create a blockchain, will create the technology, and it will have tokens. People who will come and create token will build their token, will build on that technology. They will not have to create their own technology. That means the coin will act like a land that will help other to come and build their house. So the coin will be the land and the token will be the house. Once you understand that all the coin, all the crypto are there because they promise something in the industry of cryptocurrency, you will understand why people are buying or why they are selling, and this will create what we call the volatility in the cryptocurrency industry. And for you to understand the concept of volatility, you need to understand the supply and the demand. It's very simple. For you to understand it, just know that the supply and the demand is the concept of people have interest in a project, we have more buyers than sellers, and when we lose the interest in the project, we have more sellers than buyers. Not only about the value, but when you are investing in crypto, when you are trading crypto, you can't ignore the power of the news, because the news will have an impact on the market, will make the price move in all the way. If we have a good news in crypto, we will see some pumps. A day in a crypto, you can see a 20% or 30% pump when we have a good news. You can see a 20 or 100% drop in a day when we have a bad news or any FUD on a project. So first, the buyer and the sellers are motivated by what the project is delivering in the crypto industry, because they promise something. So when they're delivering, more people are buying. When they don't, people are selling and taking profit if they made some profit. Second, the price will move according to news. If Elon Musk tweets something good about a project, be sure that in the next second, next minute, that project will pump, will gain some value. If anyone or if any influencer fed a project, there are possibility for the project to drop or lose their value. So be informed about the news, because this one will create the volatility in the market. As simple as it can be, the concept of supply and the demand is how people are interested in a project, how crypto are interested in buying or selling a project. When there are more buyers, the price go up. When there are more sellers, the price go down. Very simple. So when you open your chart, you see that the price is going down, just know that more people are selling. If you open your chart and you see the price is going up, just be sure that for some reason people are getting more interested in that project and they're just buying. So that's the only reason why the crypto price is moving. I can't explain it for you in the other simplest way. Of course, there are so many technical ways to explain it to you, but as I said, I need to be the simplest possible for you to understand how it works. So the last thing you need to understand about crypto, or if you need to start to invest or trade in crypto, you need to understand the concept of market capitalization. Very important. The formula is just the current price of a coin or a token multiplied by a circulating supply. Every time you open a chart, every time you open a coin, you will see the current price. So that price multiplying by how many coins are circulating, how many coins are already in the blockchain, you multiply, and then you will have the market capitalization. But we don't need to understand all that because so many tools, you will just need to type the name of a coin and you get all the information, the circulating supply, the market capitalization, the current price, everything you will get. The market capitalization will have a huge impact in the current price of any cryptocurrency, and all the cryptocurrency have their own market capitalization. So now we have a different type of crypto according to the market cap. We call it market cap. No need to say capitalization. So we will have large cap like Bitcoin, Ethereum. We have mid cap. We have low cap. And then the higher the market cap, that coin will be stable. How it works? In a simple way that I can explain to you, we just do a simple math. Let's suppose that we are buying a project of, we are having, not buying yet, we are having a project of $100,000 of market capitalization. A very simple way to understand how it have like the impact on the market is that for this coin, let's say with the current price in the market of $1, for this coin to go from $1 to $2, we need to see more $100,000 to come in the market for this coin to go from $1 to $2. You understand? So that means 100% of this coin is the total of the market capitalization. 100% of this specific coin will be $100,000. 1% of it will be $1,000. If you come with $1,000 on the current price, you will see a move of 1%. I hope you understand. If you don't understand, just let me know in the comment section and I will try to do another video, a specific video to explain to you how market capitalization work, but I think it's quite simple. Just know that the current market capitalization will be 100% of the coin. So if we have more buys of the same value, the price will double. If we have like a half sell of that value, the price will go down of 50%. So very simple. So now you will understand that a coin with $1 trillion will be so stable because not so many people will come and buy $1 billion of that coin. So you will come with $10 you buy, you will come with this amount you buy, so you will have less impact on that project, on the price of that project. But if you see those low cap, let's say $100,000, $1 million, you come with $10,000, some impact will be seen directly on the market, and this will create the volatility. Sometimes with big investors, when they have like 30 million holdings of a project with $100 million, if they sell all the 30 million, you will see directly a 30% drop on that project. So I guess you understand how the market capitalization is so important in the market. And this is also important for you to understand because when new traders come in the industry, they come with the hope to do 1,000x on a project, and they will come and say that they are going to buy Dogecoin and expect for it to do another 1,000x. So for you to at least see the probability to do that 1000x, you need to check the market capitalization and see for it to do 1000x how much money needs to come on that specific project, and then you will understand if it's still possible or not for that project to do 1000x. So these are the basics that you need to understand if you are new in crypto, you want to start to invest or trade in crypto. Let me know in the comment section which one you don't really understand, if it's still confusing, but I hope not, because I've been trying to explain it to you in the simplest way. Just let me know in the comment section, and don't forget to give me a like and subscribe to the channel, and see you in the next one, where I'm going to show you in details what other information, what you need to do for you to start trading, what the things that you need to have on your phone or on your laptop, what mistake you need to avoid, and then yeah, just subscribe to the channel, and see you in the next one.